weekend all. Ira Epstein of Linn Associates with your agriculture update, and this is your weekend edition for Friday, August 9th, 2019. We're about 1:40 p.m., but these are the settlement prices, and today was one of these days as the market is waiting for the huge government report on Monday that is going to give us some ideas about, first, acreage in corn, yields, ending stocks. It's going to be a heck of a report, and from there we'll have a pretty good idea as to guesses about, of course, the acreage that's left in soybeans and corn, because you extrapolate some. The second part that we'll look at is the guesses on yields as the season goes on. Now today what we're looking at is what's the weather pattern going to be. We've had a lot of rain recently, but then it sort of shut off a week ago. Now we're hearing about some dry conditions. Playing weatherman in these markets, very, very difficult. Hard time of the year, but it doesn't change. Every year it's the same type of thing. Stock market a little lower, a mixed bag in the metals, but really silver finished around 1693, so it's going to jump with these other markets to the downside. Bonds and notes today just playing a game of sideways, and President Trump, of course, had a big impromptu interview this morning again, and he's talking about China and that the U.S. are not going to sell to Huawei anything because they've shut off our agriculture purchases. Okay. Let's take a look, if we could, and we start on the weekend edition with a monthly chart of soybeans. Then everything else is going to be weekly because we're looking at sort of the bigger picture. And as you can see, you've just been drifting sideways. This is an 18-month moving average of closes, and this is an area chart of only closing prices. And it shows you that for the month we're up 9 3/4 cents, but the real action is going to begin Monday as the market gets some numbers to work with. Should the market take off to the upside from where you're at, $9 is a key number. Now, if you also look at it, we haven't been over the 18-month moving average of closes since in 2018, and I'm talking probably the first third of 2018. So that's the resistance point. Close over that, the game gets very interesting. When we look at the chart action, and if I get my technician to move this cursor for me, right over there, great, my fault. As you look at this market, you can see that we've had a bit of a break in it. The market still has a pattern of lower highs, lower lows. So what that is doing is it's got the trend, as I'll define it. If you define trend as a pattern of either lower highs, lower lows for a downtrend, and uptrends, higher highs, higher lows, and no trend in some manner has a higher high and a lower low, but they're not stepping in a ladder formation. You are getting that ladder formation here. And where is the market fighting? I think you'd agree with me that basically in May you started hitting on a regular basis the weekly average, and you haven't really stopped it. Admit, yes, you had one up week, then you came back down to it a second week where you didn't touch it, but all the other weeks in there have touched it. So that seems to be the area the market's fighting. At the end of this week, the market did close over that 18-week average. Therefore, I'm going to call the bias up. Whenever you close above the 18-week average, I say the bias is up, under, down. Because the swing line is down and the bias is up, the two fight each other, which makes perfect sense going into the crop reports that we're going to get come Monday. When we look at Bollinger Bands, which are these black dashed lines, they're an algorithm designed to keep the market trading within them. Now, often you'll ride that band or push out on it if you're coming out of sideways action and something major occurs. And we did that. We went from the 924 area, as you can see, all the way down near 780, bounced away, and now we're playing and haven't hit that band in a while. Let's assume you had a really bullish report in the market. If the market were to take off, the 100-week average and the upper Bollinger Band at 931 are potential resistance points. If this market gets a real bearish report and starts a big break, then the 805.5 area could be another extreme number to look for support. In the meantime, neutral is that 18-week average. In terms of momentum, it's flat. The market's not pointing up or down, bias up, swing line down. A setup going into the report. In the meal market, you have a bearish setup going into the report. You have lower highs, lower lows, downtrend. The market's under the 18-week average of closes, bias down. And momentum has not even flattened out. So this part of it is still bearish. Resistance at the 305 area. Take out 317, you negate the bearishness, and you possibly could walk into resistance at the 325 area. What about a bearish report? You might get down to the lower Bollinger Band. In soybean oil, this market's the opposite. It's bullish. You've got higher lows, higher highs. This market's taken on a different life than the rest of the soy complex. It's up to the upper Bollinger Band. I teach traders in my charting course that one of the first things that I look for is the first time you hit a Bollinger Band, on the upside or downside, you're probably in an area where the market's going to stall on you. Does it always happen? Nothing in life always happens. I wish it did. But I play, and that's what chart action is, what happens more times than not. And if you take a look and go back and do your own work, you'll see that. Does it mean you can't run from here? No, that's not what I'm saying. But what I am saying is I think pros took money off the table today at that upper Bollinger Band, which makes sense going into the USDA report. In the corn market, from this good rally that we had here, as the market got into this 460 area, the market fell back about 60 cents into the 18-week average of closes and has stalled out since then. It's up for the week 10 3/4 cents, but you still have the swing line down, the bias up since you're over that 18-week average, and momentum in the market still sort of pointing downward as I'm reading it. In the wheat market, you fell from the upper Bollinger Band area back to what I call those lines in the sand. I call the 18-week or the 18-day moving average, depending if you're on a weekly or daily chart, the line in the sand. If a market goes back to its, from that number, the things start happening. Should this market get under 471 3/4, you'd reinstate what? The bias to the downside, along with already having lower highs, lower lows. That would give you another one. You get a somewhat negative reaction to the crop on Monday. You might pull back into these two areas of support, 488 to 482 3/4, and a real bullish reaction could set the market potentially up here, but you'd first have to clear this last swing line high. We'll see what it does. Momentum pretty flat in this market. In the cocoa, this is a bear market that has hit its downside targets. It hasn't yet really stalled out. You're down for the week 125 points. You finished at 21.95 under the combination of the 18-week average and the lower Bollinger Band. Now, last week we had not hit these numbers. This is the first challenge of them, so I wouldn't be surprised if on the longer term, traders start looking between there and this area saying, okay, are we getting a little overdone in the market? Not a surprise, but the trend down, the bias down, and no, on the weekly charts, I don't look for overbought, oversold. Which way is the momentum pointing? Up, down, or sideways? Still pointing down, bias down, but as I said, you've hit a target. Sugar market. If we take a look, you hit the Bollinger Band right through here. If you rally back, I look for that line in the sand to be a key number, and then from there it decides what to do. At this point, it started, if it takes out this low right here, to a downtrend. It did that, got down to the, as you can see, the 11, the low of the week was 1127. We closed 1186. The Bollinger Band bottom 1140. It was hit again, and the market bounced away 80 points. The trend is still down. You negate the downtrend if you take out 1230, but because you made a lower low this week than the 1139, you can't start a clear uptrend. You can certainly get upside bias, but you can't get that. I'm expecting to see resistance in this area, momentum flat to slightly pushing down. In the coffee market, you finished the week at 97.30, just underneath the 18-week average. So the bias is down. You have a pattern of a higher high, and this week's low was 94.30, taking, let's see, did it take out this? It did not. So you still have the pattern of higher lows, higher highs. Now, if we take a look, you got up one time here to this upper Bollinger Band, pulled for a run back to the line in the sand, went through this number. If it continues, then I look for the 100-week average. And then the question is, what does it do next? And so far, it's not answering really my questions, just sort of hanging here. Let's assume it gets under the 9,400 area. Okay, you'd still have a higher high and lower low. So I don't see a clean-cut downtrend. I see the potential if you take out this week's highs of 98.90 and not taking out 9,400 as the market trying to reestablish its uptrend. It'll take momentum flattening out for that to occur as well. The cotton market's still very much in a downtrend. It's had lower highs, lower and lows for quite a while in place. The market at first kept hitting the Bollinger Band, then it moved to the right-hand side and it's resumed that downtrend. Momentum locked in, bias down, bearish market. Cattle market going sideways right now, and there's divergence. You have momentum pointing up, the bias is down, the trend is down. Lower highs, still lower lows. You don't know what's going to happen if the market's going to break through this low and start down again or get over this 109.60 area. I wait to see, but who's running the market? I think it got itself neutral because the momentum picked up. So that divergence has me just sitting back looking at it. In the hog market, we've had a higher high and a lower low. So there's no trend. Momentum is flat as can be. The bias is down. It seems to me a market that's just whipping back and forth. A trader's delight, not a trend delight. So you put it all together and you try to figure out what to do next, and that's going to be the hardest thing. You know, the grain markets would probably get a big boost if China and the U.S. got together. The problem is I don't see that occurring anytime soon. They both have to get to a certain pain level, I guess, where everybody gives on something. One of the things I do first thing in the morning, like this morning, I started recording at 5:20 or 5:30 a.m. Central Daylight Time. I put together for you a morning video. Now, it is not here on YouTube. It is a subscriber video only, and in it, I go through 40 different charts telling you what I see in them, where I see what's going on, and I'll give you a good dose of the morning fundamentals because I've already had a chance at that hour. I've read what's going on in Asia, Europe, and I've already looked to see what are the reports coming up for the day in the U.S. from the night before, and I refresh that in the morning, so I'll bring you up to date. I cover 40 or so futures charts, and then I like to do about 4 or 5 ETFs each time. It's a combination of talking a little bit of fundamentals, talking to you technical analysis, and unlike these, I can get very specific. Buy here, sell there, do this, don't do this. This is what they're going to do. And there's more studies on the chart than you see on these. They're also, I'm not in them. I'm talking with a headset, recording these 40 different charts, and the charts will look just like you're seeing through here. They'll have a black background, more studies in them. I cover the markets in this exact sequence each time for a reason. At the bottom of the video, there's if you will, a bar that you pull. And it, of course, moves the video along, but it lights up. It'll tell you if you're in the grain section. It'll tell you if you're in the meat section. So let's assume you're a grain trader and you don't want to know about stock indices. Why are you wasting your time? I take you right to that area. On the other side of the chart right here will be a lexicon. And that lexicon, you can click grains, meats, the softs, whatever the heck you're looking for in any arena that you're doing. I do charge for this. 26.5 cents a day to try it for the first 30 days. After that, it's going to be $15 for the next 30 days, and there's no contract. You can quit anytime you want. What I will commit to, if you want, is a 1-year subscription, and that'll work out to be $156 a year, so you get a break of about $25 or so off the $15 per month if you were to go time and time again. Take advantage of it if that's what you want to do. Think of it this way. It's about 3 cents in corn for a year's worth of this. How do you find out more? Go to our website, www.iraepstein.com. Under the word education or research, look for morning subscriber video. Just click it on. It explains it all, and you can sign up for there as well. In the meantime, I'll be all over the grain market come Monday and be writing about it for my other types of research that you can find out about there as well. Have a great day.